how you got started and the reasons behind it.
I was really young. I was in my very early 20s, and I was working at my very first corporate job. I had a friend who was a trader, but he was doing really well. He had kind of developed a system where he was using moving average crossovers. I think he was also doing price over moving average crossovers, and he was really happy. It was like 1997, so you could throw a dart and make money. I really got excited when I saw him making money at trading, and I thought, gosh, if this guy can do it, I know I can. I started studying a little bit about trading, read some books on it, and then I jumped right in. And as I mentioned, we were right here at the end of the 1990s. There's a dot-com bubble. I kind of developed an Adonis complex. I didn't think I could lose money. You know, I had some moments where I did lose money, and when I did, it really hurt. It wisened me up, and I think you really aren't a trader until you've had a really bad loss. It's almost your tuition on Wall Street. You're gonna have to lose money. I still lose money to this day. 17 years later, I think most people, they tend to play that down. They play it down. They really talk about how much money you can really make in trading, but they fail sometimes to mention to you that part of making that money is losing money. You know, losing money was a real big, important step, I think, for me. I got started in the mid-1990s. I haven't ever looked back. Yeah, I absolutely love trading. I think it is probably the best business in the world.
What would you say were some of your main early setbacks or failures? Like, what sort of things did you find yourself struggling with in your early days?
I tell you what happened initially to me was I would start, when I first started trading, I mentioned I didn't paper trade, so I would just go ahead and trade a stock. First lesson I learned really hard was not to listen to other people's ideas. I don't mean informed traders. I'm talking about the average person at work or a coworker or an uncle at the Thanksgiving dinner. I mean, you just want to avoid taking those kinds of stock picks from people. Also, stuff on TV. I mean, you listen to some of the stuff on TV and you hear different things. I think it's really important for people to have a system. And most people don't, and that's why I think most traders don't succeed, is that they don't really have a set of rules or parameters that they stick to. And that's one of the hard lessons I learned early on. You've got to have a system. You just can't take stock picks from people. If your system generates the stock picks, well, then that's a whole different story. We've created a system that I've been using now for a long time, and it generates stock picks based upon those parameters, based upon those rules. And if you have a system like that, that's one thing. But if you just got an uncle at the dinner table telling you why you should buy this one stock, you've got to do more due diligence than that. Another lesson was after I lost money in the markets, I noticed that I had a hard time pulling the trigger. But after I had a good loss, I failed to put my stop loss order in where I wanted it to, didn't fully understand how they work. It ended up really hurting me. After that, I had a real hard time jumping back in like I did. That was good in some respects because it caused me to think about things before I jumped in, but it also kind of paralyzed me. That's one thing you can't have as a trader. You can't second guess yourself. You've got to have a system and you've got to work that system and you can't be afraid. So I think overcoming the fear of actually putting that money into the market, just trusting my gut, trusting my system, trusting what I was doing, that took a little bit of time. I know there's people who've been trading for some time who still have that problem. They have a hard time pulling the trigger because they're fearful that they may lose money. And you've got to overcome.
Was there ever a point in your journey when everything just clicked and you just sort of knew that you were going to make a success trading?
I think, it took a long time to really develop and hone down a system. I use technical analysis predominantly to find my entry point. I use fundamental analysis to sort out the stocks that I'll actually put my money into. Then I use the technical analysis to filter them down and figure out, okay, which one is the right one to enter right now. Knowing when to buy them is the key when you're a trader. I use technical analysis to do that. Technical analysis was intimidating to me. And as I looked at charts, I just had kind of a fascination with them, began to study them. And yeah, there was a moment where it clicked. When I first got started, I would print out charts of the stocks that I wanted to trade and the stocks that I did trade. And I would go back and I would just literally draw on them. I would draw trend lines on them. I would try to find, here's where I bought, here's where I sold. And then I would try to figure out what happened on the chart that I lost money or what happened on the chart that caused me to make money. And I think after doing that for about a year, I really began to feel confident. The other thing that I did was I really began to focus upon as my account balance grew. I mean, this is hard to do when you have a small account balance, because when you're just starting out like me, whenever you have just like $700 and that's all you've got, you have to hit a home run on every stock. So you have to take these wild risks in order to make money. Otherwise, you're just kind of spinning your wheels paying trading costs. I think when you don't have very much money, you're more prone to take a lot of risks. But as my account balance grew, I began to focus on more blue chip stocks that I could buy and then go to bed and not worry about waking up the next morning and finding out that they went bankrupt. So I started focusing on those stocks mainly. And then what I did was I really began to focus in on just a handful. That way, I would know when something was different about the chart. I boiled it down that for a long time, all I was trading were 3 stocks, and I looked at their charts every single day. And I would notice that if they opened up in the morning, that they would, the stock would do something. And if it opened down in the morning, there was a 60 or 70% chance it would do this later in the day. And so I just came to know those stocks real well. I knew their charts. I knew their behavior. I knew their volume levels. I knew when volume was unusual, so I could take advantage of that. That's really when I started to really get my stride, where you first start out and you're willing to trade anything that moves. You realize that that's kind of a losing game in the end. You've really got to develop a niche. You've got to develop a strategy, or we talked about earlier, a system that works. And for some people, that's just honing in on a handful of stocks. I have another friend who only trades energy, just oil and natural gas. That's all he trades. And he knows those markets very well. He can't really trade some other stocks. I mean, he knows how to trade, but he probably wouldn't be as much of a success had he tried to just trade stocks. He focuses upon 1 or 2 things and does it really well. And that's the beauty of trading. You don't have to be a master of all of these different stocks and know everything. You really just focus on a handful of stocks or maybe an industry or a sector and just really become good at it.
So that's something you would suggest to every entry-level trader, is just to pick a few stocks and get to know them really well.
I don't think that's realistic. I think most people need to kind of have that wild experience at first. I don't think it's natural to start that way. I think they should kind of have their normal, natural entry into trading. If they've been doing it for a little bit of time, I think that's the wise thing to do. Now let's pull back, take some of that knowledge that we've learned, and let's begin to apply it to specific stocks or specific sectors and focus on what you know. In fact, I was working at TV Guide whenever I was trading that TV Guide stock. I knew the company. I began to watch it, and it began to break into a channel. So it would go from like $48 down to $42. And then as soon as it hit 42 on the chart, it would always go back up to 48. It was like 2 years where I just played that back and forth. Then it broke one time. Then it went down below 42. And then I had to figure out what to do. So that's the kind of stuff that you do when you're focusing upon just a handful of stock. You begin to notice patterns like that. That's where the money is.
Typically speaking, before you enter a trade, what are you looking for? What are the sort of things that get you excited about a trade?
I don't do a whole lot of trading, day trading, intraday trading. It's just too stressful. I've done it in the past. You can make money doing it, but you can make a lot more money if you position trade. Position trading is different from day trading in the fact that day trading, you're trying to exploit a minuscule part of an existing trend. I mean, you're just literally scalping profits out of it. Yeah, you can make money. But for the person who doesn't have a huge account balance, they need a bigger return in order for the money to make sense or the return to make sense. Position trading is where you identify a stock that is poised to begin an uptrend, and you take a position beforehand. It's really difficult to do. It's hard to find bottoms. That's speculative type of trading. And then, of course, there's swing trading. Swing trading just simply takes advantage of a position or of an existing trend, but for a longer period of time than a day trader does. I consider myself a swing trader and a position trader. One particular commodity that I'm bullish on right now is corn. Corn has been beaten down so hard on the charts. I've decided to take a position in corn, a period of about 12 to 18 months. So that's a position trade. It's basically a trade where I say, okay, all of the geopolitical forces and all of the economic forces have driven this price down. I believe that it's oversold. And so I'm going to step in, place a trade, and I'm going to buy it, believe that over the course of the next 12 to 18 months, it's going to be much higher than that. That is not a swing trade. That's a position trade. A swing trade would be something where I see an existing trend. It's going up, and a stock is just going up, and I just hop on and ride the train higher. A swing trader sees the train moving and hops on. The position trader sees the train in the station still, and he gets on before it even starts moving. He stands to make the most amount of money if he's right. Swing trading can be just as lucrative if you know how to do it properly.
How long would you say you're holding a typical sort of swing trade for?
I would say my typical swing trade are anywhere from 1 week to 5 weeks, somewhere in there. Usually 5-6 weeks is about the limit. Lately, we've been in this market that just keeps going higher and higher and higher. And so in a case like that, you don't want to cut your gains short. You want to let them run. You know that old saying, let your winners run and cut your losses short. So in this environment, yes, typically I'll only hold for 5 or 6 weeks, but if the trend is still moving in my direction, I'll just stay in it and I'll just continue to raise my stop loss. I always trade with a stop loss. Don't trade without a stop loss. I'll raise my stop loss or use a trailing stop loss. I'll let the stock continue to go higher.
What does a trading plan mean to you, and what should entry-level traders do to create one?
My grandfather, who served in the World War II, told me that it was important when you walk into a room to know the exit. I always used to think he was paranoid, but it's a very true statement. That applies to trading especially. Most people don't realize that you make money when you buy, not when you sell. That is a point that is so important, I think, for traders to understand. You have to buy right in order to succeed at trading. It's when you buy, when you place that order, that is the moment where you're making money. Because if you buy wrong, you'll know it quickly. If you buy right, you'll also know it quickly. So it's important, I think, to know your exit. What's your exit strategy? Never walk into a stock, not know what your exit strategy is. A good exit strategy has a dollar amount. If I buy a stock at $30, I don't want to lose more than 8 to 10% on a stock under any circumstance. For the majority of my trade, I don't want to lose more than 8 to 10%. And I stick that in my stop loss order immediately after I place the trade. Having a system is part of your trading plan. I'm going to buy the stock. Am I going to buy it on a market order or am I going to buy it on a limit order? And then once you get in, you place that immediate stop loss order. And then you decide to yourself, how much do I expect to get out of this? Profit potential is an important part of the equation whenever you are placing trades. You should know approximately what you expect to earn from the stock before you buy the stock. You have to know that, because if you don't know that, then you don't know if you're making the best decision. And if I have 4 or 5 different stocks to choose from, I want to choose the one that has the greatest risk-reward ratio. And so I'm looking for the stock that has the best profit potential for the least amount of risk. So you have to know all that before you jump in. A trading plan really is all about making sure that you have a systematized approach to your trading and you don't buy the wrong stock at the wrong time or even the right stock at the wrong time.
Where do you often see entry-level traders slipping up, and what would you say to them? I mean, what sort of issues do they face that come up quite regularly?
Probably knowing when to sell. I mean, when you get into a stock and it goes up, right? You buy a stock and it goes up and you're excited and you've got your stop loss there and it's up a little bit. I think sometimes new traders especially, and even, those of us who've been trading for a long time, sometimes it's easy if we don't have a plan to get confused and get emotional. When the stock goes up 10%, we think to ourselves, oh, this is great. Well, surely it's going to keep going up. And then it goes back down and you lose all your money all the gains that you had made. So I think it's important, don't ever let a gain turn into a loss. But I think that's probably one of the things that discourage a lot of traders, is that they don't know when to sell. They're either too timid or they're too greedy. It's a hard lesson to learn. It's one of these things that you just have to learn through consistently doing it. When I enter a stock, I typically have a profit potential that I have in mind, and I have my stop loss. And I know all those things right when I buy the stock, because I immediately place a stop loss order, and then I begin to watch that stock. Let's say that I plan on making 8% from that stock. When it gets up to 8%, I'm moving my stop loss up really tight, because I don't want the market to tank the next day just all of a sudden, and my stock and all my gains that I worked so hard to get now they're gone. Now, you want to lock in those gains, and that's why you need to know your profit potential. So again, if my profit potential on a stock is 8 to 10%, I expect it to go up by that much, then I want to watch that stock. And when it gets up to that level, I want to choke up that stop loss and keep it real tight. That way, if it does fall back, I still make money. I would say for most new traders that I encounter, usually figuring out when to sell is usually the hardest thing. And you can overcome that with the system. You have to know what would cause me to sell. What would that be? What are the sell signals? If you don't have any of those, then you're going to lose money, you know? So you got to have some sort of warning system built in that you can refer to. That can be a moving average crossover. It could be RSI, something happening in the RSI. It could be a stochastic move. I mean, there's so many different things that you can look at that will give you an idea that maybe it's time to bail on this stock. You just got to have that in mind.
What is it that you believe stops the majority of traders from making that huge success?
No system. They don't have a system. They are attracted by the amount of money that they can make. They're attracted by the lifestyle that trading affords. I mean, I got to admit, trading is nice. I mean, the lifestyle is very good. When you succeed as a trader, you have the ability to work from anywhere in the world. One of the very first traders that I met, it left this lasting impression on me. In fact, this might be the most motivating thing that drove me to become a trader. He was an older guy. He was probably late 60s, and he was a trader, and he had a yacht, and he lived on his yacht. I mean, most of the time, probably like 5 or 6 months out of the year. And he had his family, his wife and the grandkids, and they'd all go out sailing on their yacht. And he would trade in the first few hours of the morning. By the end of the morning, and he was done, he would trade like Walmart. He would trade IBM. He had a lot of money, and he would use options and different things. And he would just make $1,000, $2,000 a day. When IBM or Walmart moves 10, 20 cents and you have a lot of money in it, you can make a lot of money. So it was very low risk trading. And I saw what he was doing, and I thought, you've got to be kidding me. This is fantastic, because I was working a slob job, and I was not very happy, and I thought, man, I've got to make my life something like this. Trading now, with all of the internet and the computers and everything that we have now, you can do this from anywhere. You can do it from a yacht, out in the middle of the ocean. You can do it from your house in your pajamas. I mean, so trading is really, really sweet in that respect. People see that and they get caught up by it. They forget that in order to get there, they have to have a plan. And so I think many times people are very excited by the dream or by the vision of what life could be as a trader. They just don't build the bridge to it, and they set forth the hard work that's required to get there. And again, what that means is when you start losing money in a trade, cutting those losses. And then you're going to buy another stock. And if you start losing money again, you cut the loss. I went through a period where I lost money for about a year. It was the worst time in my trading career. I mean, I could not make money to save my life. It was unbelievable. And of course, this is before I had my system too, but still, I was very frustrated. And I almost threw in the towel. And I think back at that time, oh my gosh, what if I had done that? And that's one of the things I tell new traders is that do not give up. If you really want this, if you really want to succeed, if you really want to have that lifestyle that you have in your mind, you cannot give up. You have to continue. And when you lose money, you've just got to lick your wounds and keep going. But if you stop trading, it's over. It's over. I will say this. If you don't have a system, that's not my recommendation to you, because you're just going to keep losing money. Here's the thing to remember about Wall Street. The guys who are on Wall Street in New York City, these guys are smarter than you and me and everybody that we know put together. And if they're not smarter than us, they're certainly more slippery than us. That's a kosher way to say it. It's a very dirty game. They see guys like you and me coming a mile away. When we come in and we type in and we want to order, 100 shares of a particular stock, they know exactly who we are, and they know how to shake us out and take our money. That's why it's very important for the average trader who's out there to have a system, to not give up, to understand that he has to have some knowledge, that he can't do this without gaining some experience and knowledge. There's a lot of seminars out there. There's a lot of coaching programs out there, and many of them are thousands and thousands and thousands of dollars. I've never done any of those, and I succeeded. I'm not saying you can't make money using those. I know you can. When I say system, what I mean by that is that Read through many different books, read through different trading books, notice what people use for trading strategies and start using some of them and find out which one works for you. Um, Really sit down and take the charts that you've traded and draw on them, print them out and draw on them, look at them, become intimately familiar with the tools of your trade, and just realize that it's going to take time. Uh, it's going to take time. Unfortunately, there's been a lot of TV infomercials and websites out there that make it sound like, anybody can make $1 million overnight by trading this one little stock that you don't know about, but I do. So give me money and I'll tell you which one it is. It doesn't work that way. You got to have a system if you want to do this long term.
Tracking progress and reviewing trades. Is this something you do? Maybe you did it earlier on. How important is this for newbie traders, or is it a little overrated?
I think sometimes it's a little unrealistic to think that, you're going to have enough time to do all of that. I do think that it's very important, and I still do it to this day, is to always know why you lost money, or always know why, more importantly, perhaps, why you made money. Sometimes when we make money, we'll chalk it up and just, consider ourselves great and move on, but we don't stop to really think, now, how did that happen, right? How did those stars align? How did I make that money? And because when we lose money, I think we all know we need to figure out how that happened, because we don't want it to happen again. But likewise, when you make money, you want to make sure you understand so you can make that happen again. I would say that probably one of the smartest things people can do, focusing upon printing out charts, looking at them, maybe you don't have to print them out, but just really pay close attention, draw on the charts, really look at the charts and understand. And I think one of the most important things, the biggest thing that ever happened to me in trading was understanding trends. That was it. All markets go up, down, or sideways. I mean, that's really all it is. When stocks overall, like when the S&P 500, for example, is in an uptrend, 3 out of 4 stocks are going to follow that trend. If a market is trending down, 3 out of 4 stocks are going to follow that trend. So if you're trying to go long in a market that's going down, you're giving your money away. And if you're trying to short when the market's going up, you're just giving your money away. So you've got to understand trends and ride the trends. And I think understanding how trends operate, being able to draw a simple trend line on a chart, they seem simple, but a lot of traders I've met don't know how to do that. So I think those are some really important things. Find out why your trade didn't work by looking at the chart. Try to find similarities in your losses and similarities in your gains, and try to learn from them.
Let's go to the closing bell, and we'll hit you with a round of questions we asked all our guests. First one would be, what's the best piece of advice you've ever received?
Best piece of advice I've ever received would be to follow the money. If you want to know the truth about anything, you've just got to follow the money. Don't pay attention to what people say. Pay attention to what people do. And when it comes to stocks, it's the same thing. If you want to know what's really happening in a stock, pay attention to what the insiders are doing. Pay attention to what the institutions are doing. Follow the money, and you'll find out what's really happening.